Bitcoin has emerged as one of the most successful asset classes in recent years. At the time of this recording, one Bitcoin is valued at approximately $105,000, marking a tenfold increase over the past 5 years. The total market capitalization of the asset now exceeds $2 trillion. An increasing number of publicly traded companies are choosing to hold Bitcoin as part of their corporate treasury strategies. The most prominent example is MicroStrategy, a company that began purchasing Bitcoin in 2020. Originally a software firm, MicroStrategy has shifted its focus almost entirely toward accumulating Bitcoin. The company has even changed its name to Strategy B to reflect this new direction. Currently, it holds 580,000 Bitcoins, accounting for roughly 3% of the total supply. MicroStrategy's transformation into a Bitcoin-focused company drew significant attention from speculative investors, resulting in its stock price rising well above the company's underlying asset value. This enabled the firm to raise tens of billions of dollars through public markets to acquire even more Bitcoin. In the business world, success often invites imitation. On May 27, 2025, the parent company of Trump's Truth Social platform announced its intention to raise $2.5 billion solely to acquire Bitcoin. Facing challenges in its core business, GameStop has also declared a new Bitcoin acquisition strategy. Like any asset, Bitcoin's price is determined by supply and demand. If more publicly traded companies begin buying Bitcoin, this could create a self-reinforcing cycle where demand itself drives up the price. To evaluate the potential impact of corporate Bitcoin purchases, it is essential to understand the current distribution of Bitcoin ownership. The maximum supply of Bitcoin is capped at 21 million coins, with 19.9 million already mined. However, not all of these are actively traded. An estimated 1.1 million Bitcoins are stored in wallets believed to be controlled by Bitcoin's anonymous creator, Satoshi Nakamoto. Many more have been lost permanently, especially in Bitcoin's early days when the asset had little value. One widely known example is that of a British man named James Howells, who accidentally discarded a hard drive containing access to 8,000 Bitcoins, now worth over $800 million. Due to Bitcoin's decentralized and pseudonymous nature, estimating the number of lost coins is challenging. Blockchain analytics firms estimate that between 2.3 million and 3.7 million Bitcoins may be lost, with 3 million as a reasonable midpoint. In addition to lost coins, a significant number are held by long-term holders, often referred to as hodlers, a term derived from hold on for dear life. These individuals are deeply committed to Bitcoin and have no intention of selling in the foreseeable future. While some suggest that the majority of Bitcoin hasn't moved in over a year, indicating a strong base of hodlers, this can be misleading. Many of these unmoved coins are stored by centralized exchanges like Coinbase, where transactions occur off-chain and do not register as movements on the blockchain. As a result, dormant-looking wallets may actually support billions of dollars in trading activity. Despite these complexities, it is possible to estimate Bitcoin's global distribution based on publicly available data. According to the TimeChain Index, which tracks and categorizes Bitcoin wallet holdings, nearly 10 million Bitcoins can be traced. Centralized exchanges are the largest holders, with approximately 3.5 million Bitcoins. Lost coins, estimated at 3 million, form the second largest category. Bitcoin exchange-traded funds collectively hold about 1.3 million Bitcoins, while 1.1 million remain in wallets tied to Satoshi Nakamoto. Bitcoin mining companies hold around 900,000 Bitcoins. Individual wallets account for roughly 800,000 Bitcoins, including 80,000 believed to be controlled by the hacker of the Mt. Gox exchange. Publicly traded companies collectively own 700,000 Bitcoins, with MicroStrategy as the leader. Custodians, such as Coinbase Prime, hold around 450,000 Bitcoins on behalf of institutional investors. Governments, primarily the United States and China, control approximately 280,000 Bitcoins seized from criminal organizations. Contract wallets used in decentralized finance protocols hold around 195,000 Bitcoins. Over-the-counter exchanges account for 150,000 Bitcoins. In total, these known sources account for 12.5 million Bitcoins, or about two-thirds of the mine supply. The rest is likely held by unidentified individuals, foreign exchanges, and criminal organizations. or locked-in wallets not yet accounted for. Focusing on corporate ownership, the most significant holders outside of miners are MicroStrategy, Tesla, Block, Metaplanet, and Nexon. Block is known for its Square payment system, while Nexon is a Japanese gaming company best known for titles like MapleStory. Among them, MicroStrategy stands out with its 710,000 bitcoins, representing about 5.7% of the total supply. When removing inaccessible bitcoins, such as those lost, held by governments, or in dormant wallets, the free-floating supply drops to around 7 million. This means that companies now hold approximately 10% of the circulating supply, a significant concentration that may have contributed to Bitcoin's price appreciation. Not all corporate Bitcoin purchases have yielded success. Nexon, for instance, bought a small amount of Bitcoin in April 2021, coinciding with the release of a weak earnings forecast. The market interpreted this move as a distraction from poor business performance, and the company's stock price declined by 50% in the following months. While Nexon's stock has since recovered, it was due to a rebound in its gaming business rather than its Bitcoin holdings. Tesla and Block's Bitcoin acquisitions are widely attributed to the personal convictions of their CEOs rather than corporate necessity. Metaplanet presents a more compelling case. Initially a small investment company listed on the Tokyo Stock Exchange, Metaplanet owned a single hotel and had limited cash reserves. In December 2024, it used a portion of its funds to buy a small amount of Bitcoin. Although the purchase was modest, the announcement attracted speculative investors. The stock price surged, and the company was able to raise hundreds of millions of dollars through share offerings. To promote the brand, Metaplanet hired a former Bitcoin Magazine employee as its director of Bitcoin strategy. Following MicroStrategy's model, Metaplanet shifted entirely toward Bitcoin acquisition, pushing its market capitalization to 730 billion yen, about $5 billion. However, its Bitcoin holdings remain modest at roughly $830 million. Like MicroStrategy, its valuation is now heavily driven by speculation rather than fundamental assets. This investor enthusiasm is based largely on the greater fool theory, the belief that one can sell at a higher price to someone else. But the risk remains that eventually the pool of buyers will dry up. The Trump Media and Technology Group, which owns Truth Social, is a recent example. Despite plans to raise $2.5 billion to purchase Bitcoin, the company's stock dropped by over 20% shortly after the announcement, likely due to investor skepticism given its minimal revenue and large operating losses. Of the companies emulating MicroStrategy, only Metaplanet can be considered a relative success. Still, it operates on a much smaller scale, with Bitcoin holdings far below MicroStrategy's. Since beginning its strategy in August 2020, MicroStrategy initially acquired Bitcoin at a steady pace. But over the past year, its acquisition rate has accelerated dramatically. With its current market cap exceeding $100 billion and a loyal investor base, it could continue raising significant capital to acquire even more Bitcoin in the future. The challenge lies in the long-term sustainability of this approach. Traditional companies raise capital to generate profits and return value to shareholders. MicroStrategy, however, has no plans to return capital. Its value proposition is based entirely on accumulating Bitcoin and the hope that others will continue to buy into this vision. While this model has succeeded so far, it rests on speculative assumptions. If market sentiment turns and share prices fall below the value of the Bitcoin holdings, these companies may be forced to liquidate their assets. This could trigger a cascade of selling and a rapid decline in Bitcoin's price. MicroStrategy and its imitators have played a crucial role in Bitcoin's recent rise, but the long-term stability of this strategy remains uncertain. Thanks for watching InvestingFlix. If you found this video helpful, don't forget to like, share, and drop a comment below. For more expert insights on personal finance, investing, and wealth building, hit that subscribe button and turn on notifications so you never miss out.